Greetings, everybody. Welcome to Liberty Call. Today is Thursday, April 20th, 420, 2023. Hope everybody's having a fantastical day out there in the world. Did everyone leave out milk and cookies for Snoop Dogg's? So he'd leave you some frosty nugs? Guess not. All righty. Hope everybody's having a great day. Like I said, not the best day in the markets. I think people are starting to get the hint that things aren't as good as the people on TV claim. But we shall see how things do turn out. But if it's your first time watching Liberty Call, thank you. I'm glad you're here. Give me some thumbs up. Hit those buttons underneath. Like, share, subscribe, follow, all those good things depending upon where you're watching this. So, all right, let's go ahead and jump into the numbers and see how they turned out today. Dow Jones was down 0.33%, 110 points, closed at 33,786. S&P 500 was down 0.59, closed at 4130. NASDAQ was down 0.8%. Closed at 12,059. The VIX was up 3.89. It's currently at 1710 at the moment. Canada was down 0.24. Brazil was up 0.31. Mexico was down 0.1%. See how they did over in Europe. Germany was down 0.62. UK flat, up 0.05. France down 0.14. Netherlands was up 0.12. Spain down 0.46. Italy down 1.1%. Let's see here. Switzerland up 0.21 and Portugal down 1% even. Russian exchanges both in the green today. MOEX up 1.2, RTSI up 1.39. And the overnights in Asia mostly red. Starting out with the Nikkei in Japan, it was up 0.11. Australia down 0.04. New Zealand down 0.3. The Shanghai in China was down 0.09. The Shenzhen component down 0.37. China A50 down 0.85, DJ Shanghai down 0.14, Hang Seng up 0.07, and the Taiwan weighted was down 0.62% for the day. All right, so like I said, not the prettiest day in the markets, but certainly not terrible. So, all right, let's go ahead and jump on over to today's market recap. S&P 500 slides on Tesla slump and economic jitters. The S&P 500 slipped on Wednesday as investor sentiment was soured by disappointing quarterly results, including those of Tesla and economic data pointing to a slowing economy. Tesla fell 10% after the electric vehicle maker reported earnings that missed Wall Street expectations as margins were dragged lower by a recent string of price cuts. The concerns over margins intensified after CEO Elon Musk touted more cost cuts to boost sales, forcing some cautious commentary from Tesla bull Wedbush. Tesla's willingness to sacrifice margins for long-term demand gains stoked fears of a price war in the industry, pushing other automakers, including GM and Ford, more than 3% lower. AT&T, a major Dow component, slumped more than 10% amid concerns about the company's ability to meet guidance and mixed quarterly results, showing revenue missed estimates. There were some positives on the earnings front as D.R. Horton and Las Vegas Sands Corp reported quarterly results that beat both top and bottom lines, with shares trading up more than 6% and 5% respectively. In tech, IBM traded above the flat line after reporting mixed quarterly results and announced that it had teamed up with Moderna to advance mRNA research. Yeah, because that had worked so well in the last couple of years. I mean, we haven't killed anybody using that type of stuff. Semiconductor stocks traded roughly unchanged as investors weighed up a surge in Lam Research Corp on better than expected quarterly results and a slump in Seagate Technology PLC following a quarterly report that missed on both the top and bottom lines. Sentiment on risk assets, including stocks, was also soured by data showing further weakness in manufacturing and an uptick in jobless claims. The Philadelphia Fed said on Thursday that its manufacturing index fell to a reading of negative 31.3 in April from negative 23.2 in March. The weaker data stoked worries about a deeper slowdown in the economy at a time when the Federal Reserve continues to lean towards further rate hikes. Oh my God, why would they do that? Oh yeah, they printed all that money a few years ago that made everyone feel better. Yeah, and now you're having to feel the pain. So tough cookies. Echoing some of her Fed peers, Cleveland Federal Reserve President Loretta Meester said she expected that interest rates would, quote, need to move somewhat further into restrictive territory this year, end quote, and remain higher to curb inflation. Insane. All right. Yeah, Loretta Meester's kind of, well, again, any of these people who work these pseudo-government jobs, they are all pretty much dumbasses. So if you expect any genius out of them, you better hide and wait. It's not going to happen. All right, next up, U.S. labor market cooling, leading indicator flashes recession. Uh-oh, this could be bad. The number of Americans filing new claims for unemployment benefits increased moderately last week, with initial claims for state unemployment benefits rising by 5,000 to a seasonally adjusted 245,000 for the week ending April 15th. Although the increase was not significant, it suggests that the labor market is gradually slowing as the Federal Reserve's year-long interest rate hiking campaign dampens demand. The loss of labor market momentum is adding to slumping retail sales and manufacturing activity, heightening the risk of recession in the second half of the year. Banks have tightened lending, which could make it harder for households and small businesses to access credit. A measure of future economic activity also plunged to its lowest level in nearly 2.5 years in March, further increasing concerns of a recession. Despite a second straight weekly increase, adjusted claims at current levels suggest that employment growth remains strong, which should allow the U.S. Central Bank to raise rates next month before possibly halting its fastest monetary policy tightening cycle since the 1980s. However, the labor market is fraying around the edges as job gains have moderated somewhat, and several districts report a slower pace of growth. Contacts have also reported that the labor market becoming less tight, with a small number of firms reporting mass layoffs, which were centered at a subset of the largest companies. The housing market remains mired in recession, with existing home sales dropping by 2.4% to a seasonally adjusted annual rate of 4.44 million units in March. Manufacturing also feeling the heat of higher borrowing costs, with factory activity in the mid-Atlantic region plunging to the lowest level in nearly 3 years in April. Although there were cracks in the labor market, economists do not expect widespread job losses and anticipate a short and mild recession. Yeah, we heard that. Remember when inflation was transitory? It's mild. It's nothing. That was what was it last year? I mean, it gets blurry at this point. Again, don't trust these idiots. They're lying to you. Data next week on people receiving benefits after an initial week of aid. A proxy for hiring will offer more clues on the state of the labor market in April. Continuing claims increased by 61,000 to 1.865 million during the week ending April 8th, the highest since November of 21. However, continuing claims remain low by historical standards as some of the laid-off workers are quickly finding employment. Overall, the demand for workers remains robust, which should keep the pool of unemployed workers from expanding sharply. All right, well, these people seem to think everything's going to be okay. All we got to do is just stop raising rates and maybe print a bunch of money and life will be fine. Don't these people know that? Not knowing that this is what caused it. All right, last up, U.S. home prices fall most in a decade, but still far from affordable. All right, U.S. home prices have started to decline, but not enough for many aspiring buyers to afford a home. According to data from the National Association of Realtors, the median selling price of a previously owned home in March was $375,700, which is 0.9% lower than the previous year, but still far above pre-pandemic levels. The rapid rise in prices began in 2020 when Americans moved to suburban areas due to historically low borrowing costs and the pandemic. Now, I think people were leaving the blue cities because they're shitholes. That's why they were moving out to the suburbs and to the country. So, I look at things here in Colorado. Out where I live, it's beautiful. It's nice. There's no Democrats anywhere to be seen. You drive 40 minutes north that way, it's full of blue-haired idiots who, there's bums everywhere. They turned, the capital of Colorado into this homeless shelter. It's nasty. Hardly they want to go into town anymore because it's so gross. But, you get what you vote for. Where was I? Okay, although prices peaked in the middle of last year when mortgage rates started to increase, limited supply of houses has kept prices high. As of last month, there were only 980,000 homes for sale, a record low since '99. The high demand for entry-level homes has resulted in multiple offers pushing buyers towards new construction. Prices for both single-family and multifamily homes increased on a monthly basis, but analysts suggest the overall trend still points to a cooling market, with prices having peaked. While prices in the West fell by 7.5% from March of 22, they ticked up in other regions. Despite the declines in prices, many aspiring buyers are still finding it difficult to enter the market due to limited supply of affordable housing. Oh, poor them. Well, maybe skip a few of those lattes and crap you spend money on and save up a bigger down payment, or make more money. That's kind of the way it goes. All right, well, that's everything I had for today. If anyone needs anything from me, please go to dsafinancialgroup.com, and I'll talk to you guys next time. Adios.